Hi everyone and welcome back to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Friday the 2nd of May. The final chart I'm going to look at today is gold, and the gold price continues, or has continued in the last few days, to fall away. And it continues to basically just negate the bullish sentiment that we had on the back of that bulky one-day reversal last Thursday, as this drift lower has continued. Bulls are actually, I think, running out of positive arguments for gold, and the one that they are really now clinging on to is going to be this 144-day moving average, which has been the basis of support through the last, certainly for the past few weeks, and been an excellent gauge in the longer term. So that is probably the one real thing that the bulls can cling to, as these momentum indicators are now pretty much firmly in negative configuration, and suggesting that there is downside pressure still on this gold chart. Intraday, we'll see this in even more detail. You've got this downtrend that you have in place here. I mean, this is the pivot level around 1300, which I still think is a key to the upside. So if we get any spike higher, I think 1300 is the key level that we need to be watching out for. But you've got this downtrend intact over the past last 4 days. And now resistance being found at lower levels. The initial resistance actually comes in at 1285, around about there, but anywhere between 1290 and that downtrend line would be I think, a chance to sell, because I think it just seems to be that there's downside pressure back towards this 1268.24 mark. All these momentum indicators on the hourly chart are also in bearish configuration. RSI continues to fall over around about the 60 mark. We're currently at around 50, so there is a room for a little bit further in terms of a recovery before we can start getting into selling into that strength. Also, the MACD lines are in negative configuration, as well as are the stochastics. As I said, selling into strength, I think, is the way to go on this gold chart. However, you would certainly argue that there is rather a caveat with the Ukrainian geopolitical situation. The Ukrainian military is apparently moving more strongly into the eastern part of the country to try and quell the pro-Russian separatist movement there. And if that flares up, then that could induce some buying pressure into gold, but at the moment, certainly on the technicals, selling into strength is the way to play gold today. Gold also will be impacted by this non-farm payrolls number out at 1:30 this afternoon. Any dollar strength should pull payrolls lower, but we wait and see how that one pans out. So I wish you good luck in your trading on gold today, and I will speak to you on Monday. Thank you.